Everyone tells you that Bitcoin guarantees at least a 40% rally in Q4. And unfortunately, that's the dangerous half-truth of the real reality. Yes, Bitcoin has averaged 141% gains in Q4 over the past decade, but the median return is only 31%. That gap is the difference between financial clarity and emotional panic. And if you don't understand the outliers, November will shake you out before you really even see the true gains. And this is not just theory. I've been involved in the crypto markets since 2015. And in fact, I've been around some of the greatest investors of all time. I've traded through multiple cycles and have studied numerous different data points and understand how investors end up always getting trapped, as I myself have been trapped more than once. The point isn't to predict exact numbers. It's to build a mental model strong enough to withstand the volatility. Because historically, Q4 is Bitcoin's best quarter. But the best doesn't mean the easiest. A lot of people call this month Uptober. It has average returns of 20% with a win rate of 83%. That means 10 out of the last 12 Octobers it has ended positive. Even in down brutal years, October often shows strength. The worst October ever was in 2014 with just a 13% decline. In Bitcoin terms, that's practically stable. October is reliable, but it's not a free pass. It's the launch pad for the quarter, but not the destination. Now comes November. This is the month that seduces all investors. On paper, November averages a stunning 43% return. But here's the truth, that number is a mirage. It's inflated by a single outlier, which happened in 2013 when Bitcoin skyrocketed 449% in just a single month. Strip that out and the median November return is just a mere 3.6. The adjusted average would be around 6%, which means November is less guaranteed to moonshot. It's more of a coin flip kind of situation. This is the trap investors expect another 2013 when the reality delivers volatility and panic selling. Then comes December, and what December says is a trickier story. The average return, 6.5%. Median return, just 1.3%. And what's the win rate? Well, it's 50-50. Why is this so unpredictable though? Because December is when traders lock in profits and governments force tax maneuvers. That creates sharp swings in the market. If you just look at 2017, after the most famous Bitcoin rally ever, where I made multiple six figures, December delivered a brutal crash, which I lost all the six figures. So December is the month that separates the patient from the emotional when it comes to investors. Now let's put the months together. Scenario 1, the conservative case. October is plus 21%, November is plus 3.6%, December is plus 1.3%, and that would take Bitcoin roughly to 140,000, which is roughly a 27% gain. Now let's talk about scenario 2, the adjusted realistic case. October would be a positive 21%, November would be a positive 6%, December 1.3%. Now this gets us right around the 30% gain for Bitcoin, putting us at 145,000 per coin. Now scenario 3 would be the bullish case. October 33%, November 20%, December 100%. That would push Bitcoin towards 225,000 per coin, which is roughly 100% gain. But remember, this isn't about predictions, it's about preparation. Now let's zoom out a bit. The more you step back, the more you could actually see, and the picture becomes a lot clearer. The US dollar has lost 99% of its purchasing power since 1912. Now that's not conspiracy, it's documented in history, and Bitcoin exists inside that context. A power law relationship shows Bitcoin's price tracks fiat debasement inside predictable channel. That channel projects Bitcoin reaching 1 million between 2028 and 2030. Short-term dips and even the more violent ones are just noise. The long-term trajectory is structural. It's built Bitcoin on a monetary policy, not monthly candles. So the real danger isn't its volatility. The real danger is your reaction to it. Bitcoin will always swing. It always has, and it always will. But volatility is not failure. It's the engine of Bitcoin's growth. Your mental framework is the determining factor whether you profit from your fear or you lose from your fear. What I always say is, when in doubt, zoom out. Because Bitcoin's story is bigger than any single quarter that we could try to analyze. And while Bitcoin may be the best performing asset to ever exist, diversification is always a smart move. And staying up to date with technology and how it's revolutionizing how people invest and or trade could be something that's very advantageous to you. Something I've been doing is using algorithmic trading softwares. If you're unfamiliar, all of these videos is me explaining how well I've done with them and how they actually work. If you're interested in those, check those videos out to see how you could potentially diversify your portfolio and get an edge alongside Bitcoin's rallies. Thanks for watching.